What if I told you that while your friends are grinding at their 9 to 5 jobs, you could be earning $3,000 every single month without lifting a finger? What if I told you that this isn't some fantasy reserved for trust fund babies or people who got lucky with cryptocurrency, but something you can achieve starting with whatever you have right now? Most people would call that impossible. They'd say you're dreaming, that generating meaningful passive income requires millions in the bank or decades of experience. But here's the thing that might shock you. They're completely wrong, and I'm going to prove it to you today. My name is Zach, and I help people understand how simple dividend strategies can create extraordinary monthly income streams. If you're tired of working harder just to barely get ahead, and you want to discover how regular people are building wealth that pays them every single month, make sure to subscribe to the channel and hit that like button if this information changes how you think about money. Here's something that will blow your mind. Most Americans believe they need hundreds of thousands of dollars to generate any meaningful passive income. Meanwhile, there are people right now earning more from their dividend payments than most people make at their part-time jobs, and they're doing it with surprisingly modest investment amounts. The difference isn't luck or some secret knowledge that only Wall Street insiders possess. It's understanding a fundamental approach that most people completely ignore. Before we dive into the specific strategy, let me ask you something. When you picture earning $3,000 per month in dividends, what do you see? Maybe you imagine needing to invest $250,000 or having to become some kind of financial expert who spends hours analyzing quarterly reports. Perhaps you think you need perfect timing or the ability to predict market movements. Or maybe, just maybe, you picture something simpler, a straightforward system that anyone can follow, regardless of their starting point or financial background. Here's where most people get dividend investing completely backwards. They think it's about finding the highest yielding stocks and throwing all their money at them, when in reality, sustainable dividend income is about building a diversified foundation that grows consistently over time. The secret lies in understanding something that sounds almost too simple to be true. If you can systematically build a portfolio of quality dividend-paying companies and reinvest those payments strategically, you can reach that $3,000 monthly target faster than most people think possible. Let's break down the mathematics because this is where it gets interesting. To generate $3,000 per month in dividends, you need $36,000 annually in dividend income. Now, if we're targeting a conservative 4.5% average dividend yield across your entire portfolio, you'd need approximately $800,000 invested. That might sound like an impossible mountain to climb, but here's what changes the entire equation. You don't need to start with $800,000. You need to build toward it systematically while letting compound growth and dividend reinvestment do most of the heavy lifting. Think about this for a moment. Every dividend payment you receive can be reinvested to purchase more dividend-paying shares. Those additional shares generate their own dividend payments, which can be reinvested to buy even more shares. It's like a snowball rolling down a hill, getting bigger and faster as it accumulates more snow. This isn't some theoretical concept that only works on paper. This is the exact strategy that has created countless millionaires who started with ordinary incomes and modest savings. But wait, because it gets even better, if you're strategic about your approach and focus on dividend growth stocks rather than just high-yield companies, your income stream doesn't just provide immediate cash flow. It actually increases every year as these companies raise their dividend payments. Imagine owning shares in companies that not only pay you quarterly dividends, but increase those payments annually. Your $3,000 monthly target becomes a stepping stone rather than a ceiling. Here's where this strategy becomes truly powerful. Most people approach investing completely backwards. They focus on trying to time the market or pick individual winners, essentially gambling with their financial future. But when you build a diversified dividend portfolio, you're not trying to predict what the market will do next week or next month. You're positioning yourself to benefit from the long-term profitability of established businesses that have been paying shareholders for decades. The beauty of dividend investing is that it works regardless of market conditions. When stock prices go up, your portfolio value increases. When stock prices go down, you can reinvest your dividends at discounted prices, acquiring more shares for the same amount of money. During volatile periods, you're getting paid to wait through quarterly dividend payments while building your position for future growth. Now, I know what some of you are thinking. Zach, this all sounds great in theory, but what about taxes? Won't I get killed paying taxes on all these dividend payments? It's a fair question, and it's actually one of the reasons this strategy is more powerful than most people realize. Qualified dividends receive preferential tax treatment compared to ordinary income. For many investors, dividend income is taxed at much lower rates than their regular paycheck. Plus, there are tax-advantaged accounts specifically designed to help you build wealth more efficiently. Traditional and Roth retirement accounts can shelter your dividend income from current taxes, allowing compound growth to work even more effectively. We'll dive deeper into the tax optimization strategies later in this video, but the key point is that smart dividend investors pay less in taxes while building more wealth. Here's something that might make you question everything you've been taught about building wealth. The person who consistently invests $2,000 per month in quality dividend stocks will likely achieve financial independence faster than someone trying to get rich, quick through day trading or speculative investments. It's not about making perfect decisions or timing the market flawlessly. It's about making good decisions consistently over time. Consider this scenario. You start investing $1,500 monthly in a diversified dividend portfolio with an average yield of 4.5%. Through dividend reinvestment and annual dividend increases averaging 6%, you're not just building toward that $3,000 monthly target. You're creating a wealth-generating machine that continues growing long after you reach your initial goal. The mathematics here are truly remarkable. In the early years, most of your dividend income comes from your own contributions. You're essentially doing the heavy lifting while compound growth warms up. But after several years of consistent investing and reinvesting, something magical starts happening. Your investments begin generating more annual income than you're contributing from your paycheck. This is the crossover point that separates those who achieve financial independence from those who remain dependent on their jobs forever. Once your dividend income exceeds your monthly contributions, you've essentially created a money-making machine that works harder than you do. Your investments are now earning more than you're saving, and that gap widens exponentially as time progresses. What makes this approach even more compelling is its flexibility. Unlike rental properties that require maintenance and management, or businesses that demand your constant attention, dividend stocks work for you automatically. You don't need to find tenants, handle repairs, or worry about inventory. Your dividend payments arrive quarterly, whether you're sleeping, traveling, or focusing on other priorities. The companies in your portfolio are generating revenue, serving customers, and creating value around the clock. As a shareholder, you participate in their success through regular dividend payments and long-term appreciation. You're essentially owning pieces of businesses without having to run them yourself. But here's what separates successful dividend investors from those who never reach their income goals. They understand that building a $3,000 monthly dividend stream requires a systematic approach, not random stock picking or chasing the latest high-yield investment that sounds too good to be true. The foundation of any successful dividend strategy starts with understanding the different types of dividend-paying companies and how they fit into your overall portfolio. You've got your dividend aristocrats, companies that have increased their dividend payments for at least 25 consecutive years. These are the blue-chip stalwarts like Coca-Cola, Johnson & Johnson, and Procter & Gamble. They might not offer the highest yields, but they provide reliability and consistent growth that forms the backbone of your income strategy. Then, you have your high-yield dividend stocks, typically offering yields between 6 and 10%. These include real estate investment trusts, utility companies, and master limited partnerships. While these higher yields are attractive, they often come with additional risks or the tax complications that you need to understand before diving in. The key is finding the right balance between current income and future growth. A portfolio weighted too heavily toward high-yield stocks might generate impressive income today, but lack the growth potential to reach your $3,000 monthly target. Conversely, focusing exclusively on dividend growth stocks with lower current yields might take longer to generate meaningful cash flow. If you're serious about building real wealth through dividend investing and want to see exactly how I've helped thousands of people create passive income streams that actually work, make sure to hit that subscribe button right now. I post new videos every week showing you the exact strategies, specific stock recommendations, and real portfolio examples that are generating life-changing monthly income for ordinary people. Here's the systematic approach that actually works. Start by establishing your target timeline and monthly investment capacity. If you can invest $2,000 monthly and you're targeting $3,000 in monthly dividends within 12 years, you need a portfolio that will grow to approximately $800,000 with an average yield of 4.5%. That timeline might seem long, but remember that every month you delay starting, you're essentially pushing your financial independence further into the future. The person who starts investing today with modest amounts will reach their goal years before someone who waits for perfect conditions or larger investment amounts. Your first step is opening a tax-advantaged investment account. For most people, this means maxing out their employer-sponsored retirement plan, especially if there's company matching involved. Free money from employer matching should always be your first priority because it provides an immediate return on your investment before the stock market even gets involved. Once you've captured all available employer matching, consider opening a Roth individual retirement account. The beauty of Roth accounts is that your dividend income grows completely tax-free, and qualified withdrawals in retirement don't trigger any tax obligations. For dividend investors, this tax-free growth can add hundreds of thousands to your long-term wealth. Now comes the fun part, selecting your actual dividend investments. Rather than trying to pick individual stocks and hoping you choose correctly, consider starting with broad market dividend-focused exchange-traded funds. These funds hold hundreds of dividend-paying companies, providing instant diversification and professional management at extremely low costs. The Vanguard Dividend Appreciation ETF tracks companies with histories of increasing their dividend payments. The iShares Select Dividend ETF focuses on high-quality companies with sustainable dividend yields. The Schwab U.S. Dividend Equity ETF provides exposure to the highest dividend-yielding stocks in the market. By combining these types of funds, you create a diversified foundation that captures different aspects of the dividend investing universe. But here's where most beginning dividend investors make their first major mistake. They see a stock or fund yielding 8 or 10% and assume it's automatically better than something yielding 4%. High yields often signal underlying business problems, unsustainable payout ratios, or companies that haven't grown their dividends in years. The most sustainable dividend yields typically fall between 3 and 6%. Companies paying dividends in this range usually have healthy businesses, reasonable payout ratios, and room to increase their payments over time. Remember, you're not just building for current income, you're building for income that grows every year. This is where dividend growth becomes absolutely crucial to your success. A company paying a 4% yield today that increases its dividend by 6% annually will be yielding much more on your original investment within just a few years. After 10 years, that 4% yield becomes over 7% based on your initial investment, and the dividend increases continue compounding. Compare this to a company offering a 10% yield today, but no dividend growth. Not only do you miss out on increasing income over time, but high-yield companies often cut their dividends during economic downturns, destroying both your income stream and your capital investment. The magic happens when you combine systematic investing with dividend reinvestment. Instead of taking your quarterly dividend payments as cash, you reinvest them to purchase additional shares of your dividend-paying investments. This creates a compounding effect that dramatically accelerates your progress toward that $3,000 monthly target. Let's walk through a realistic example. You invest $1,500 monthly in a diversified dividend portfolio, yielding 4.5% annually. In your first year, You invest $18,000 and receive approximately $800 in dividend payments. By reinvesting those dividends, you now own shares worth roughly $18,800. In year 2, your monthly contributions plus dividend reinvestment result in a portfolio worth approximately $38,000, generating around $1,700 in annual dividends. Notice how the dividend income is accelerating faster than your contributions alone would suggest. By year 5, your portfolio has grown to over $100,000, generating approximately $4,500 annually in dividends. You're still contributing $1,500 monthly, but now your investments are contributing meaningful amounts to your wealth-building progress. This acceleration continues throughout your investing journey. By year 10, your portfolio approaches $300,000, generating over $13,000 annually in dividend income. You're now earning more than $1,000 monthly in dividends while continuing to build toward your ultimate goal. The final years of your journey showcase the true power of compound dividend investing. Your portfolio growth accelerates dramatically as reinvested dividends purchase more shares, which generate more dividends, creating an exponential growth curve that most people find difficult to believe until they experience it themselves. What makes this approach even more powerful is its adaptability to changing life circumstances. If you receive a bonus, tax refund, or inheritance, you can accelerate your timeline by making additional investments. If you face temporary financial challenges, you can reduce your monthly contributions without derailing your long-term progress. The dividend payments continue arriving regardless of your personal situation, providing a level of financial security that traditional savings accounts or bonds simply cannot match. During market downturns, you're accumulating more shares at discounted prices. During market upswings, your existing shares appreciate while continuing to generate income. The psychological shift that happens when you start receiving meaningful dividend payments cannot be overstated. There's something profoundly different about opening your brokerage account and seeing hundreds or thousands of dollars that appeared without any effort on your part. It's not salary from trading hours for money. It's not income from actively managing a business or property. It's pure passive income generated by companies you own, working around the clock to create value. This mindset transformation affects every aspect of how you approach money and investing. You stop thinking like someone who depends entirely on their paycheck and start thinking like someone who owns productive assets. When you understand that businesses are generating profits and sharing them with shareholders, the entire concept of wealth building becomes less mysterious and more mechanical. Now here's where things get really exciting for anyone serious about reaching that $3,000 monthly target. The system I've outlined isn't just theory. It's the exact approach I've used personally and taught to thousands of people who are now generating substantial monthly dividend income. If you want to see the specific stocks, funds, and exact portfolio allocations that are producing these results, make sure to hit that subscribe button right now. I share detailed breakdowns, real portfolio examples, and current market opportunities every single week that you won't find anywhere else. But here's something I need you to understand before you close this video. Every single day you wait to start building your dividend portfolio is another day you're pushing that $3,000 monthly income further into the future. The strategies I've shared aren't complicated theories that require years of study. They're simple, proven methods that ordinary people are using right now to create extraordinary passive income streams. The mathematics don't lie. The compound growth doesn't care about your excuses, and the dividend payments don't stop flowing just because you're not ready to start. Your future self is counting on the decision you make today. Will you be the person who looks back in 10 years wishing you had started? Or will you be the one collecting thousands in monthly dividend payments because you took action when it mattered most? The choice is entirely yours, but remember this. Every successful dividend investor started exactly where you are right now, with questions, concerns, and the same goal of building real wealth that pays them every month. The only difference between them and everyone else is they started. Your $3,000 monthly dividend income is waiting. The only question is whether you'll claim it or let someone else take your spot. If you found value in this video, hit that subscribe button, and I'll see you in the next one where we dive even deeper into building wealth that actually works.